To finance the deficit in the maiden 3.6 trillion budget of President William Ruto, the National Treasury plans to borrow 587 billion Kenya shillings from the domestic market and 131.5 billion Kenya shillings from foreign sources. The Parliamentary Budget Office (PBO) in its 16th edition Budget Watch report has revealed that in order to meet external debt obligations, there is a proposal to seek external commercial financing of 270 billion Kenya shillings in this financial year. This additional foreign commercial debt is expected to increase future statutory expenditures that are not channeled towards service delivery. Further, given the dynamic nature of foreign financing, the financing mix may change in the course of the financial year. According to the report, the domestic interest payments are expected to rise by 17% to 628 billion Kenya shillings, while external interest payments will increase by 6% to 146.9 billion Kenya shillings. The larger growth in domestic interest compared to external interest is linked to the high average interest on domestic debt compared to the average interest rates on external debt. Even though interest rate on the external debt remain modest, the burden of this debt remains significant on account of Kenya's current account situation and the depreciating Kenya shilling exchange rate.
On the strength of the shilling, I am of a very conservative view that the rate should be where it is now. We're tasking central bank to make sure that it is now stable. So if now the prediction is that the USD against the shilling should be at 150, let it remain at that.
Well,
but I would rather have that rate as constant rather than having an artificial a strong shilling that keeps fluctuating every time, making the business environment very unpredictable.
The beauty is that Korea is living truth. Is basically admitting that they sold a lie to the public that they will bring the dollar to 100 shillings.
A Budget Watch report by the Parliamentary Budget Office says the domestic debt remains critical to help reduce the interest rate burden, particularly the upward creep in interest rates linked to the refinancing of short-term domestic debt in form of treasury bills. In line with this, the medium-term debt management strategy for 2023 recognized that this risk and recommended a borrowing mix of 50-50 domestic to external borrowing, which was considered and approved by Parliament. The office further recommended that legislators keep an eye on the proposed reduction in domestic borrowing so as to manage the size of domestic interest payments and curb refinancing risk. Further, it calls for consistency between the medium-term debt management strategy and implementation to help sustainably address escalating public debt vulnerabilities. Meanwhile, the economy is projected to expand by 5.5% in 2023 relative to 4.8% in 2022 and by above 6% on average in the medium term. It, however, states the substantial risk to the outlook that may dampen the growth projection for 2023, which include high cost of production due to high energy prices and tight monetary policy, among others. Joel Chacha, K24 TV, Nairobi.